Good afternoon, everybody. Welcome to the Ethex and Energise Africa Cuppa Club. Today, we're going to be focusing on women investing to tackle the climate crisis. And I am joined by a great panel of ladies today who are all looking rather glamorous, I must say. And I'll be introducing those shortly. So we'll just wait for some people to join us. And then they will know who everybody is. So I hope everyone has grabbed a drink and they're ready for a good discussion to talk about finances today and how we can empower more women to get involved in investing for good. So let's just have a little warm up while we're waiting for more people to join. So we are getting close to the COP26, which will be taking place in Glasgow this year. The UK is hosting, and it will be a large meeting of people and politicians to try and agree on climate targets. And in the lead up to that, we feel it's a really good time to be just talking more about what people can be doing to green their finances and use their money for good to help tackle climate change. Now, we have a focus particularly on women today and empowering more women to get more confidence in using their money for good, talking about money and taking control of their own personal finances so that they can save and invest in line with their own social and environmental values. And why do we think that this is important? Well, according to statistics, 1 in 5 women currently hold an investment, whilst men currently hold over 1/3 of all men hold an investment. And we feel that we really need to help and empower more women, get more educated and feel more confident about doing this so that they can take more positive action with their money. And we want to be able to talk to people on a level where they can understand, try not to use jargon. So we will attempt to do that today. And the speakers that we have today are brilliantly experienced to help us on that journey. So I'd like to introduce Rebecca O'Connor, who's co-founder of Good With Money and head of pensions and savings for Interactive Investor. Welcome to Rebecca. Jeannie Boyle, who is from EQ Investors. Welcome. And Mary Stevens, who's Experiments Program Manager at Friends of the Earth, and she's going to tell us more about that and how that relates to your money during the course of the session. So we will be talking today for about 45 minutes to an hour. You can submit questions via the chat function and I will feed them into the discussion as we go. We can't answer any specific questions relating to your own personal financial circumstances. So you can always speak to an advisor if you need more help and support. So let's kick off then, shall we? Welcome again, everyone. We're going to turn to each one in turn, just to give us a bit more background about how brilliant you are and how you can talk about this subject fluently. So I'll start, let's go Rebecca, Mary, and then Jeannie.
Hi everyone, I'm Becky O'Connor. I am Head of Pensions and Savings for Interactive Investor, which is a large investment platform which offers some ethical investments. I also co-founded Good With Money, which is an ethical and sustainable personal finance website that was set up back in 2015. When there were far fewer options for what you can do with your money that can support your values, and it's grown tremendously, and it's been very satisfying to see the industry grow and try to develop more products for people. I also write a column for The Independent, an ethical money column, and I'm chair of an ethical advisory committee too, which is very practically trying to work out how to implement ethics and investment decisions. So that's me. I'm looking forward to the session.
I think it's me next. It's always a pleasure to be on a panel with Becky because she brings so much expertise to it. I'm Mary Stevens. I work for Friends of the Earth. I am our experiments program manager, but basically that means I work within our innovation program. And my job is to find new ways of tackling some of our biggest challenges around the climate and nature crises. And a couple of years ago, we started a program around how could we make it easier for people to take climate action with their money. And some of what I'm going to be talking about today will kind of follows on from that program, which we've also been lucky enough to work with Ethex and Energise Africa during that time as well. So that's me.
Hello, I'm Jeannie Boyle. I'm a chartered financial planner at EQ Investors. We're a firm of financial planners and investment managers, and since 2012 we've been running impact portfolios, which are aimed at clients who are people who are looking to take different decisions with their money and help invest in businesses that are actually supporting the United Nations Sustainable Development Goals rather than working against them. I work with individuals who are looking to make change with their money and people who are looking to perhaps tidy up their finances because they're not quite sure what's going on at any one time. I work with a range of different investors, from really young people to elderly people, but most of my clients are women and most of them are looking at investing sustainably.
Brilliant, thank you, ladies. And if I didn't already say, sorry, I'm Lisa Ashford and I'm CEO of Ethex and Energise Africa, which are two leading positive investment platforms in the UK. So thanks, everybody. So I'm going to turn first to you, Rebecca. Why do you think in particular this is such an important time for people to think about greening their finances? And yes, why don't you start us off?
It's always been an important time for people to think about greening their finances. I guess now the thing is we have such a huge amount of evidence that there is no time left for the planet, so that really helps to focus minds. And there's been several developments in the run-up to COP26 which I think really highlight how important it is now more than ever. Pointing to the comments made by Faith Birol, who's the head of the International Energy Agency, that we can't extract oil anymore and hope to keep the planet within acceptable warming levels. It just has to stop. And our investments through our pensions and who we bank with, and wherever our money goes is going on one side of the energy equation or the other, whether we know it or not. And thankfully now there are ways that we can better control where our pensions and our investments are going, and we can do so relatively quickly. So there is no time for the planet. There are lots of things that we can do as individuals that do take more time, and the impact will be felt more slowly, but the impact can be felt relatively quickly with changes that you can make to your finances. There may for some of us be more in the bank, having saved money during the pandemic through lockdowns. We know that the savings ratio has gone up. It has started to come back down again over the summer as people spent and went out to restaurants and went on holiday. But if there's some money in your bank and it's sort of languishing there, it now is a really good time to think about what to do with that, because you don't want to waste it. I'm assuming you don't want to waste it. If it's there, it could be doing something. So if there is that pot there, this is the time. It's also the time to get over feelings of guilt and shame around what we're not doing, because I think the scale of the challenge is so great that sometimes you can just sort of withdraw into your hermit shell and just think I can't do anything and feel guilty about what you don't know or what you can't do. It's just time to get over all of that, and I think COP26 will focus minds and give everybody that impetus for action.
Thanks, Rebecca. And I think that certainly from our perspective as well, we've also seen a willingness from individuals to take more of a proactive stance when it comes to thinking about what's important to them as well. And I think that's, come out of COVID. We certainly see, you know, because we represent quite a few communities that raise finance, and we see a stronger move to support those communities, because we've been, you know, so much more ingrained within our own communities over the past 2 years or so. And I think people sort of reflecting on what's important to them, and that sense of community, and how can we do better and make a better world, I think all part of that Build Back Better message that gets thrown around a lot. But, you know, I think that does resonate with a lot of people as well. Now, Jeannie, coming to you, with that in mind, you would expect to see perhaps lots of women putting their money into things that do good. What do you think is really holding women back from investing?
So I mean, first of all, I think there is some good news here, in that we are starting to see a lot more women invest for the first time. So we look at the stats for the number of people holding stocks and shares ISAs. And for a standard stocks and shares ISA, it's 56% are owned by men and 44% owned by women. But when we look at impact investment ISAs, such as the ones that we have at EQ, on our own client bank, we have 52% of our investors are women and 48% are men. So this narrative around women investing less, I think, is starting to change. But that said, I think there are still a number of factors that are holding back women. And I hate talking about women as if we're a homogenous group and we all have the same things and the thoughts and fears. And because we're not, I work with a range of different people, some of whom are very sophisticated and knowledgeable, and some are less certain. But typically what we hear about from women is a feeling of not being spoken to in the right way by the financial services industry. Unfortunately, financial advice in particular is still pretty pale male and a tiny bit stale. And in the past, I've spoken to a number of women who felt they've been patronised by an advisor, in particular when they talk about bringing values into the conversation. We know that for women, it's particularly important, for a lot of women, it's particularly important to invest in support of their personal values and to support the causes that they feel positive about. They want to make a change with their money. And too many financial advisors have dismissed that and sort of given people a bit of a pat on the head and told them not to be so silly. But that's starting to change, and I think there's more of an acceptance within financial services world that we actually can make a change with money, and we're responsible for a huge amount of capital which can be directed towards positive businesses. I think the other thing that we hear quite often is that women are less confident as investors, and I think typically this is true. However, that lack of confidence can quite often mean that women get better results than men when they invest. There have been a few different surveys in the US looking at the actual returns men get versus women. And they were finding that year on year, women were outperforming on their investments by about 1%. And the reason they do better is because they're not overconfident. Women tend to buy and hold, look after their investments, whereas men will be trading, trying to beat the market and get a better return. And that over trading of the portfolio actually reduces the return that we're getting. So to be a good investor, one of the key qualities to have is patience. And I think typically women have that more than men do. The other thing that we know is that sometimes you can be overwhelmed by choice. There are so many options out there. And you think, do I want to do it myself? Do I want to buy shares? Should I get an ISA? Should I use a Robo Advisor? Should I speak to a financial advisor? And quite often we can feel a bit paralyzed by all the different options that we have, and they're all presented with different jargon. So I know women sometimes find that they do nothing because there's so much choice out there, and you can spend hours and hours and hours researching different options without ever coming to a conclusion. So quite often it's helpful just to make a decision and get started with a really small amount. So those are some of the factors that I think are holding back women, but it's more important for us as women that we make our money work harder. We need to be investing to protect our own financial futures and the financial future of the planet. And we can do both of those things at the same time. And that's one thing we've been learning about impact investing over the last few years, is that it doesn't affect the return that you get from your money. In fact, it'll probably be a little bit better than if you'd invested in a typical non-sustainable portfolio.
Thanks, Jeannie. I suppose there's a couple of points there. One is absolutely right. You know, by talking about women as one homogenous group, we're probably switching off a large proportion, actually. And maybe that is one thing to look at in terms of really specifically targeting women at different stages of their lives and talking to them about the specifics of what their questions and challenges are at that point in their life. And Mary, this is going to lead into you in a minute, I think. And then the other thing is, you know, perhaps there is an underlying point, which I think, Rebecca, you've made before about women over the course of their lives, perhaps not putting as much into their pensions or not having as much money generally because they may have taken a role of bringing up the families. And that is also something obviously not to be ignored as well. And I suppose that relates back. It's about talking to women about the particular challenges and thoughts that they have at different times in their lives. So Mary, how does that interplay with what you have been doing and giving women in all forms more confidence to use their money to tackle climate change and other social, you know, issues?
Thanks, Lucy. A lot of what we've heard so far, I think, has really resonated with my experience. I do just want to kind of reiterate, because it is so important, the point that Becky made at the start is that you know, it is not an investment if it's destroying the planet. I say that a lot. It's a quote from the great Indian environmentalist Vandana Shiva, and I think it actually just gets to the core of this issue, because we need to stop fueling the climate crisis and we need to start investing instead in people's lives and livelihoods. You know, it's worth thinking about what we're thinking about when we talk about investment and how many different meanings that has. And I think also we can start doing that, and by investing in the lives and livelihoods often of the people who've done the least to cause this crisis. It's one of the reasons why I think Energise Africa is such a great program, for example, because it's really putting that kind of investment value into practice. So we can do this as individuals, but it's really hard. It's hard to know sometimes where to start. I think Jeannie talked about, you know, it could be quite overwhelming. There are all these questions that come up. What should I do? And it also, once you do get started, it can be hard to maintain momentum. And one thing that I remember a woman telling me about 3 years ago is that money is really lonely, or it can feel really lonely. You know, you're sat there in front of a laptop screen trying to figure out these issues, and that's not, you know, that's not the best way to stay motivated sometimes, however important you know it is, sorry. And we are stronger and much more powerful, I think, when we work together. I think Jeannie talked about, you know, had that experience of being patronized sometimes by by financial sector advice. That's certainly, you know, an experience I've had more sort of 10 years ago than now, I'm pleased to say. But, you know, actually, you're much less likely to feel patronized if you feel you've got a kind of crowd of your friends, supporters, you know, people behind you who've got your back on this issue. So with all this in mind, that's why at Friends of the Earth, when we were trying to address this question, well, how can we make it easier for people to kind of get out of this analysis paralysis and sort of, you know, take action with their money? You know, we went back to our roots in sort of grassroots action, and we thought about how we could harness the power of peer groups and peer learning to support women to take action together. You know, we know also that it works in a whole, that peer groups are a really powerful mechanism for behaviour change in a whole load of other areas. We know that it works for people who are you know, trying to get fit, whatever. What would it look like if you're trying to make your finances kind of future fit? So over the last couple of years, we've developed a program which we called Own It, and that program has trained over 40 women as hosts to work with around 150 other women to host a series of basic model is kind of 3 sessions to support women to understand where their money goes, where our money goes, how to make a difference with it. And it started with a little you know, prototype around a kitchen table, actually just getting a group of women together to talk about, you know, our money, how are we using it, where was it going. And since then we've kind of as I said, we've worked with a lot more people, We've partnered with a social enterprise called Enroll Yourself, who are real experts in the peer learning side of it, so they can really help, figure out how we learn and grow together. And those pilot cohorts have moved at least £1.2 million, probably more. It's a bit hard to kind of quantify exactly how much has been moved. And it's been really, but also it's really built the confidence of women to go on and do other things. So actually, women might have started by thinking about, I don't know, who do I bank with? Where's my current account, for example? And and there are some great examples of women who've been involved in the programme who've gone on to become much more, gone on to become advocates for financial reform in their communities and all sorts of things, just by building that confidence. And at the moment, we're currently taking expressions of interest in future cohorts of Enroll Yourself. We're particularly interested in working with employers. You might want to sponsor this, because I think there are lots of benefits for employers as well in terms of boosting. We know a lot of employers want to take action around the climate but don't really know what to do, and actually building the financial confidence of particularly of their female staff and their resilience actually could have lots of co-benefits. So we're interested in anyone who thinks, if you think your employer might be interested in sponsoring this kind of thing, maybe through a women's network or something like that, we'd love to hear from you. And also we are, we're interested in building a financial model for it, partly so we can start rolling this program out, not just to sort of women who might have, as Becky said, maybe saved up a bit during the pandemic or whatever, but actually some of those women who are the most vulnerable both to climate impacts and most financially vulnerable as well, because we've seen, for example, with the current energy price crisis, that actually climate and financial vulnerability really go hand in hand. And I think if we build women's confidence to tackle their finances and build the future they want to see, then we can, those two things really work together. See, there's a question in the chat. The program is called Own It, but we'll send out some links afterwards.
Thanks, Mary. I think that's really interesting. What would you say have been the key learnings of that program in the first cohort?
So I think a really key learning has been, that peer groups work for this model, but actually building in that, and the reason they work is you build in that accountability. So, often after a session like this, which is really, really important and really useful, people go away and they think, yes, I'm going to do this thing. But then actually without that kind of accountability and that follow-up, without one of your friends coming along and nudging you a few weeks later, how did it go? Did you look into your pension? The likelihood of people taking action really drops off. So we've seen much higher rates of people doing things like shifting their pensions, or some of those things that are quite tricky. Largely, I think, because of that accountability element. So that's been a really key learning, I think.
Right. So why don't we, in relation to some of the questions that are coming in? Oh, look, and someone said that they did it and it was brilliant. That's lovely. Good. So there's questions from someone who's younger, who just, is getting started, but one of the major concerns of, younger people who are looking at how to use their money for good is, I still might need my money for houses, children, all manner of things. And so what can I do? Because, Jeannie, you were talking about, buy and hold strategy. So how does that play in? And then the second question is around, I'm older, I've got a pension. What do I do? Can I change that, or how do I green that? So maybe, Jeannie, you go for the first question on the younger, and why don't you, Rebecca, go for the question around the sort of greening your pension, etc.
Great, yeah, it's timescales are such an important part of picking the right investment strategy. And when you're young and life is a little bit more uncertain, and there's still some amazing possibilities, unlike when you get to middle age, you're sort of fairly sure what's going to happen in the next few years. You want to make sure that you can take advantage of those opportunities and you're directing money towards the things that are going to be really important for you. And the key point about that is having the money when you need it. So the best way to make sure that money is available when you need it is to have it in cash. And any money that you think you might need in the next maybe 3 years, I think you need to have a high level of certainty over the value of that money has when you come to access it. So for that, I suggest keeping it in cash. But there are still lots of options for you in terms of greening it. There are banks such as Triodos who offer amazing options. And there are building societies that you can look at, such as, the name's gone out of my head, Ecology Building Society offer savings accounts that all have short-term interest rates. The downside to keeping money in cash is that you're not getting much of a return on it. You're probably getting an interest rate that's much lower than the rate of inflation. So any money that you're thinking, well, I probably won't need that for a few years, and I'm happy to take perhaps a little bit of risk on the value, you can start to look at investing in markets. And we suggest you have a 3-year minimum time frame, because as we know, markets go up and down. And the last thing we want to happen is for you to suddenly find the house of your dreams and to pull your money out just at the moment when markets have crashed. But if you can leave money invested for at least 3 years, the compounding growth that you get over those few years is likely to offset the risk of that happening. So you can put your money to work. I suggest over that time frame, it's usually better to invest in what we call liquid shares. So shares that are traded on a stock market where you can buy and sell every day. Because if you think you might need your money back, you want to be sure that you can sell those stocks and get a return on it. If you're thinking about longer term money that you know you won't need for 10 years or so, or perhaps even your pension fund, then you can take more risk with that fund. And by taking more risk, we mean investing a higher proportion in equities. So the value will fluctuate, but you'll get higher growth in return for taking that risk. And this is where you can look at various options offered by Robo Advisors or working with an advisor to pick an appropriate basket of shares or funds for you that take into account your preferences in terms of impact and green stocks.
Great, thank you, Jeannie. And I suppose it's fair to say there are quite a few resources out there as well, which you can access to look at more of those ethical savings accounts. And Rebecca has a number of them on her website, Good With Money. You can also go to Ethical Consumer, and they have a number of guides as well and online tools. So we can send out some links to those after the session. And I think the one thing which I would say is, and we've discussed this a little bit before, I think when people think about investing, they always think about sort of like large sums of money. And actually, you can make a difference with quite small sums of money. And if everybody were to do something with a small amount of money, then we would really be, aggregating into something quite meaningful. So I suppose there is also the option of just, utilizing what, we're calling small amounts of money. Obviously, it's relative for everyone, but, £50 can be used to make small investments to do good as well. So moving to you, Rebecca, if you want to talk about the longer term aspect.
Yeah, so the question in the chat is around greening your pension if you're already taking money from that pension. I think, thinking about first step is find out what your pension is already in, because you might be lucky and you might have a provider that already offers a sustainable fund by default. Most don't. And if they don't offer it by default, then they might offer a sustainable range of investments. And you should be able to look at the underlying holdings on offer as well, meaning the companies within that selection that you can move your pension fund to. So if you're able to stay with the same provider, that takes quite a lot of the hassle out of it. And clearly, if you're paying into a workplace pension and getting employer contributions, so if you're still building it up and you're still working, There are some serious things that you need to think about in terms of whether or not you can move your pension and still retain your very valuable employer contribution. So there are things to think about here, and it almost becomes more complicated when you enter retirement and you're starting to take an income from your pension. There are, your own personal circumstances are really important. You've given up work and you need that pot to last. So you can't kind of just be thinking about the green side of things here. There's a lot to do with your own personal circumstances and doing the right thing for yourself. As Jeannie said, you can move a pension that you're already drawing down from, but it is complicated. And I think if you're not sure about tax liabilities and you're trying to keep your pension as tax efficient as possible, which of course you want to do, speaking to Pensions Wise, if you've not already used your Pensions Wise appointment, is a very good idea, but you may find that the information that they can give isn't personalised enough to your circumstances, in which case it is a good idea to speak to a financial advisor. And you can pay for financial advice through your pension. You can use up to £500 for a consultation with a financial advisor just to work out what to do with your pension. So it is possible. It may be a little bit complicated depending on the type of pension that you have currently, but a good place to start is just to find out what your current pension is invested in and whether or not there are any impediments to you moving it that would compromise you personally.
Thanks, Rebecca. And I have to say, from my own personal experience, I had a number of pensions that I contributed into in the dim and distant past, and I used a increasingly well-known app-based organization to pull those all together, and then I chose a more green option, which was actually extremely efficient, and now I can access that on a daily basis if I want. And personally, I found that really empowering, because I think part of the issue is, to a certain extent, some of the industry is still slightly stuck in the dark ages, and that sort of like access to information is actually quite hard to get in some cases. And so I think we're in a position now where things are becoming much more technically possible, and it gives us a much more direct connection to our money, and people shouldn't be afraid of utilizing technology to their benefit when it comes to accessing some of these financial tools or greater information. But on that note, there was a question around Robo Advice, and it was mentioned by you, Jeannie. Can you just tell people what that is and what's your viewpoint?
Yeah, Robo Advice is just a term to describe websites where you can set up an investment, such as an ISA or a pension, or just a standard investment account. But the Robo Advisor will help you select an appropriate portfolio, and the portfolio will usually hold they're typically what we call passive funds, so there's not any active management, but it will put together a portfolio and manage that portfolio for you. So once you've decided what level of risk you want to take, whether you want to be a very adventurous investor and get high returns, you're prepared to accept the value going up and down in return for that, or you'd want to be a little bit slower and steady in terms of the approach you take, they'll put together the portfolio. You don't need to pick any stocks, you don't need to do any research, and it will just be managed for you. And everything's done online, so you can see easily what's happening. So there's some well-known providers out there, like the one you just referred to, Lisa. They would typically be called a robo-advisor because you're not interacting with a person.
Thanks for that. And there was another question regarding cryptocurrency. Has that a place in ethical investments? And I wondered, Mary, whether that had come up in any of the peer learning groups as a discussion point.
It's a really, really interesting question, actually, because it's one we're just starting to think about. it's not straightforward at all. Some of the dynamics that people have talked about in terms of, gender and investment also play out on the crypto market. So investors in cryptocurrency are most likely to be men between the ages of 35 and 50, for example, which is quite an interesting dynamic, but also certainly it's something that younger audiences are looking at. A lot of people don't realize, perhaps, a lot of people don't realize what the carbon footprint of cryptocurrency is, because it's all sort of in the cloud. They don't actually realize how much computing power is required essentially to mine cryptocurrency, and that the current environmental impacts of that have been calculated as the emissions from cryptocurrency are broadly equivalent to that of the Netherlands at the moment, I think. So, it's like a small country on itself and only set to grow. On the other hand, there are organizations like, UNICEF is a really interesting example in this respect. UNICEF has been looking for a very long time, 5 years now, about how cryptocurrency and blockchain and, cryptocurrency basically can make it easier to transfer money quickly to people most in need and support them to deliver impact quickly. So it's not completely clear cut. But there are, but it is it's an interesting topic. It's an interesting topic to explore, and there are platforms. Most people will have heard of things like Ethereum and Bitcoin. There are others, currency called. I'm not making any recommendations of any sort. I should be really clear. But there's a currency called ADA, named after Ada Lovelace, which is looking at a different way of essentially proving the transaction that would be less energy intensive, for example. So. It's an emerging area that I don't have easy answers to at the moment, I'm afraid.
Okay, well, let's not escape down that rabbit hole too far, because we'll never find our way back again. What are the other top tips that you give people, Mary, when you are teaching people and getting them up to speed within the program? Thanks,
Lisa. I think the first thing to say is it's not me teaching them, they're teaching each other, which is a really important part of that dynamic. There's one really clear top tip, which is just start the conversation. So that's actually what's, not only are women less likely to have investments, but are also less likely to have these conversations with their peers, with their family, with their friends. Men are broadly much more likely to be talking about this. So actually just start going away and talking to people about, what is my money doing? What's it invested in? What's happening? And talk to your colleagues as well. So particularly if when it comes to pensions in particular, which is quite likely to be your largest single investment, you might find that actually finding out whether any of your colleagues share your concerns or would like to know more can make a really, really big difference. So, just start talking. Start somewhere as well. I think we've heard a few times that, it can be hard to know where to start. Just start and see how that goes. And ideally, find a buddy, find someone, whether that is a work colleague who's also interested, or a friend who wants to do this too. Someone that you can have that kind of gentle accountability with. Those things are really valuable.
Thanks, Mary. Rebecca, what would be your top tips? Anything on top of what Mary has already outlined there?
There's a great guide on Good with Money that is a guide to investing for women. It's got a checklist which is worth reading through. It's not a very long guide. It will only take 10 minutes and it will give you that confidence boost to start investing and setting up a direct debit. There's lots of things that might be admin heavy, but just identifying how much spare cash you have and setting up a direct debit for an investment that you like the look of in the product of your choice. And this is why it's good to read the guide, because it talks a little bit about the different types of product that you can look at, ISAs, lifetime ISAs, that kind of thing, for tax efficiency. So read that, and yeah, I'd say that's my top tip. Actually, you just need to a little bit of knowledge to get going. You don't need to know everything, so don't feel you need to know everything, and don't be put off if your investment falls in value a little at first if you've chosen to invest in markets, because that can happen. It's the nature of the beast. And yeah, just don't worry too much if that happens. And whilst it is great to check in on your investments, doing so too often can also be a little bit nerve-wracking. So just bear that in mind. There are lots of ups and downs on this road.
Thanks, Rebecca. And how about you, Jeannie?
Yeah, I think I'd agree with everything Rebecca just said there, but I think the important thing is, I think we've all alluded to it, is just to get started. It doesn't need to be a huge amount of money. Set up a small monthly direct debit, get used to how markets move, build your confidence and learn about what's happening. But also, the other thing I'd say is don't be afraid to ask questions. There's a whole lot of greenwashing going on out there. So if you're talking to an advisor, you're dealing with a provider, ask questions about what's in this portfolio, why did they set up this portfolio, and what can you expect, what change can you expect as a result of investing in this portfolio, so you can be sure that what you're investing in is actually what you're looking for.
All good points, and I suppose, you know, pay attention to the small print as well is quite important, especially when it comes to things like fees, etc., for whatever product you are using. And to those people in the audience, we will put some references in the follow-up email that we send around, and I think there's a few links that have gone on in the chat function as well, so we'll make sure that those are included. I think I'm going to just round it up by, you know, thanking the panelists here and saying thank you for your contributions. I hope that gives people some initial good starting points for getting started. We're really keen, I think, to see, Mary, how your programme continues to develop and flourish, and I think that's an amazing thing that you've started up there, and you know, we'll continue to support you as much as we can. And thanks, Rebecca, as ever, for adding all of your knowledge and all of the great stuff that you're doing at Good With Money. And lastly, thanks to you, Jeannie. It's great to have you in the room, and really looking forward to continuing the conversation. Thanks everyone for attending the session today, and look forward to speaking to you again all soon. Thanks, Sam.
Thank you.
Bye, guys.
Thank you.